Well, howdy, folks. This is Dr. Jeff Camarda, along with our wonderful personal wealth advisor team, and Lisa Rehburg, who is my go-to expert when it comes to thinking about selling life insurance. And Lisa was kind enough to spend some time chatting with us today. And I'm just going to kind of set the stage, Lisa, and then talk about, get some detail on your expertise. But, a lot of our clients probably don't know that there has been just a blossom market to sell life insurance policies, and Viaticals and like that back in the 90s got a really bad reputation, but this has emerged as a really important industry. So if you get to the point where you don't need the insurance, and a lot of us do, we buy insurance when we're young in case we die, to take care of our families, we survive life, we put a couple $1 million away, whatever. You get to the point where you really don't need the insurance, and you have a choice. Does it make sense to keep paying those premiums so somebody will get more money when you're dead? Or does it make sense to look at alternatives like monetizing the policy so you get some cash in hand to enhance your retirement? And there's a couple of ways to do that. If it's a whole life or a universal life or other cash value policy, you can surrender the policy and get money back from the insurance company. But frequently, and I'll say it to you now, Lisa, you'll get more money if you sell it. Is that right?
That's absolutely right. On average, 3 to 5 times that cash surrender value. So it's a significant increase most of the time.
And that's pretty spectacular, isn't it? And
Yeah,
especially, yeah, I'm sorry, go ahead.
I'm sorry, I just cut you off. Yeah, it really is. And I've seen everything from where a client had $6,000 of cash and he netted 150,000 to a client had 11,000 cash and she netted 21,000. But at the end of the day, it's still more than surrendering the policy.
And even more, this applies to term insurance that have those surrender value, like mine. The reason that Lisa and I, we've used her a couple times in the past, and got really, rave reviews back from the clients. And Lisa doesn't work for us; she doesn't pay us. This is really used to be a referral for those clients that have an interest in talking to her. We'll be happy to refer her. But I've got a bunch of term insurance policies on myself and partner Kim that we don't really need anymore. And I said, gee whiz, can I get anything for these? And I'm in the process now with Lisa to see if they have any sale value. So how does a client make this sort of decision? Do you counsel them on whether they still have an insurance need, or just tell them what it might be worth and how to go about it?
Right. So fortunately, the clients that we work with have experts like you in their lives, right? And so that conversation occurs between you and your client to determine, is this policy even needed anymore? And a little backstory real quickly. 2.5 million seniors a year will lapse or surrender their life insurance policies. And to give you some perspective, only about 3,000 sold them last year because, back to what you were originally saying, they just didn't know that selling it was even an option. So bottom line is, they have, by the time that we talk, the client and I speak, they have already determined that they don't really want this life insurance policy anymore. They're going to lapse it. They're going to surrender it. As you mentioned, maybe it's no longer needed. Perhaps it's just become too unaffordable. And it's just, it's just something that it's outlived its usefulness, shall we say. It did its job for a long period of time, and now it's just not needed anymore.
And sometimes the cash value is a couple 100,000 or more, that's kind of locked up until death, that the family could better utilize by monetizing the policy. So I guess the easy one, if we have a universal life or an adjustable premium life or variable universal, whole life, whatever, something with cash value, they know what the cash surrender value is, which is usually by this time in the policy's age equal to the cash value, right? And they see that in the annual statements. So what will be the process be? What they'd get more money, I'm guessing, if they, their health is not perfect anymore, as is typical for folks in retirement age, right? The higher their mortality, the greater the value in the marketplace. So what would the steps be if somebody wanted to explore this, Lisa?
Well, the good news is it's really easy. It starts with an application. There's no application fee. It takes us about 60 to 90 days from the time we receive an application in to market a policy, because we have to obtain a client's medical records. That is how the buyers underwrite, if you will, back to your point, what they feel a client's life expectancy is. So the buyers are not looking for clients with 30 or 40-year life expectancies. So if someone's 40 years old and running marathons, this is not going to be the right solution. But typically it's around 10 to 15 years or less. And as you mentioned, the shorter someone's life expectancy is, the more valuable their policy is, the more money buyers are willing to pay. So when we market a policy, we either receive offers or we don't, right? Sometimes the numbers just don't work for the buyers. And if we don't receive an offer, the client just walks away. Even if we do receive an offer, the client is not obligated to sell. They can just say, that's just not enough money to make it of interest for me. I'm going to pass. And they literally just walk away. So it doesn't cost clients anything to find out how much a policy is worth. If an offer is accepted and a client does sell their policy, then we do receive commissions, which are disclosed in the sale contract.
Yeah, absolutely, there are transaction costs. But again, so if there's a cash value policy and you don't get an offer, it doesn't mean you still can't cash it in, which may still be the best solution for you. And typically this makes sense for folks, I guess, late 60s on, based on life expectancy. And same, I guess, is true of term insurance about that age. The sicker, the less healthy, and the older you are, the better the chance you'll get an offer on a term insurance policy. Would you say that's true?
It's the same thing. Now, to be fair, we do have clients in their 50s, but back to your point, they have significant health issues to fit into that, life expectancy window and qualify for a life settlement.
So if somebody unfortunately has, cancer, which is terminal, or other, life-shortening disease, then and they want the money, I guess, to improve their lives, because rather the death benefit still is going to be a lot more probably than the sale value. So that's a complicated situation that myself and the PWAs would be happy to get into if sadly you're in that situation. But it really has to do with how long they expect you to live. It's like, okay, I sell a policy, the buyer's going to pay the premium until I pass on, and that's what their business model is. So do you work just for one company, Lisa? How good a quote or quotes would you typically provide?
Good question. I don't work for the buyers. That is really important. And I'm going to distinguish this real quickly. There are buyers advertising on TV, no disrespect to them, but they want clients to call them direct, because without competition, bluntly, they can underprice a policy. There are no comps in life insurance policies the way there are in real estate, right? So every client's policy is unique and their life expectancy is unique. That being said, I have a fiduciary duty. I'm a broker. I'm what's called a life settlements broker. My fiduciary duty is to clients to market their policy and obtain the highest amount of money for it that we possibly can. And two quick examples. The one I just mentioned where the cash in the policy was $6,000 and he netted $150,000. The opening offer on his policy was $30,000. And because we work with many different buyers to leverage them against each other, we were able to push the buyers to increase their offers. And literally there's 20 different offers on this. And so at the end of the day, he netted $150,000.
Yeah, let me interrupt you. That's really important point. So it's like an auction, right? If you have a policy that the surrender value statement says is worth $6,000 and somebody offers you $30,000, you're going to think you hit the jackpot, right?
Right.
And if that's the only offer you get, you're not realizing that, hey, this is worth $150,000. I'm stealing it for 30. The way you operate, you're looking at the entire marketplace and getting the best value for the client. At least that's your intention, right?
That's exactly right. So another example real quickly is a client did go directly to a buyer, a recent client, and he received a $145,000 offer on his policy. And he was an M&A, he was a mergers and acquisitions guy. So he was how many of those are out there, right? Not very many. So my point is he had the experience to negotiate. He got the buyer up to $210,000, Fast forward comes to us afterwards, we market the policy, we get him $260,000. So a 25% increase, basically.
And what was the
We
cash
did that
value?
direct.
I want to use that as a tax example. What was the cash value on that?
None, zero.
Zero. It was so 250, right? So the and just so folks know, the tax con, if you make money on these, there's a thing called basis, tax basis, and that in most cases, how much money you put into the policy less anything you took out. So say you put $100,000 into the policy and the surrender value is 120. If you surrender for 120, you're going to have to pay tax, ordinary income tax, your highest bracket on $20,000, 120 minus 100. But if she gets you 200, you're going to pay capital gains on 200 minus 120 or $80,000, and the higher tax rate just on 20. Is that right, Lisa?
That's correct.
Yeah, which is a big deal. Any other elements that you think are worth sharing with our clients and the public at large?
Absolutely. First of all, this is legal. It has been legal since 1911, but the market really didn't develop until fairly recently. So that's why many people haven't heard about it. And I'm so privileged to be here to at least raise visibility. The other thing that's important is this market, not only me as a broker, but the buyers as well, we are all highly regulated by the departments of insurance in each state. So this is not a free-for-all. It is a very highly regulated market, and there's a lot of compliance around it for all the right reasons.
So which states are you licensed in?
All 50.
Excellent. That's very helpful. Do you have any questions, Jen? Or it was fantastic. Lou? Anybody else out there in YouTube land like to query Lisa? Lisa, any concluding remarks?
Just, you know what, Jeff, once again, happy to be here, delighted to be here to raise visibility. And it's a privilege to be of service to clients. And it's always fun to call a client and say the wire transfer just went out or the check's in FedEx.
That's right. That's always a happy day, isn't it? Almost as good as selling a boat. All right, so Camarda clients, please, I encourage you to have these discussions with your personal wealth advisor in terms of you have insurance that you might not need anymore. The PWAs will ask you about it on annual reviews going forward. Say goodbye for now for the nonce. Thank you so much for watching. Until next time, this is the Camarda Wealth team. We're honored to have Lisa on the program today. Thank you so much.